There you go. All right, so over the past 2 days, we figured out that it's not that easy for those collaborations to happen between fintechs and scientists, academics. We found a few lines, like for those of you who may not have worked with the amazing people here on stage, you may think that maybe I can still find a fintech. So maybe the line of collaboration could be in extending theory with some kind of fintech factors. We're thinking robo-advisors. So Gustavo is going to tell us about it more or less. What academics can do, they can also find some anomalies, right, within or with fintech data. Also, you could analyze regulations, right? Or the governance frameworks. You could also treat some kind of data sets more rigorously. And then I provided the last one, so bring cross-disciplinary theories. So this is like the 5 lines. And we're gonna start in a different order. So the first challenge that was brought by Gustavo was on robo-advisors. So there is an issue with risk profiling currently with robo-advisors. And Gustavo mentioned there might be some help needed from his fintech, from academics. So could you super briefly tell us what the challenge is, what you were expecting, what you might still expect to get?
Of course. Yeah, so basically the problem was very simple. Current risk profiling questionnaires are based on a 1999 seminal paper and are based on psychometric questionnaires, do not fully reflect the customer's risk profiles, right? And with the growth of the robo-advisory services and businesses, this is becoming a problem. And during this conference, actually, I found very interesting to see that it was not only a question from a business perspective, but also from the regulatory side and also from the academia side. I was very pleased to see research on behavioral risk from the robo-advisors, businesses. So basically, the challenge was to try to find a solution to that. Try to find a new way to see the problem. Should I spoil with the solutions?
Yes, I think so, because then we can keep building. Go ahead.
Yeah. So basically, well, thanks to all, they are not in the room, but Professor Lee pointed out to some studies that are very interesting. And then I talked to Professor Barbara in one of the corridors, and we were discussing that how simplistic and how ridiculous is the problem. And then we just saw each other in the corridor, and we just thought to ourselves why don't we dynamize one of those variables? And that's in the academic perspective, right? So one of those solutions was just probably in front of our eyes, and when we discussed the problem, we basically found partially the solution, which could be potentially a paper to produce, which could be dynamize lambda in the utility function of the investor. So that's a promising collaboration, but there are other ideas. There are behavioral studies. There are many other options to go. So if anybody else is interested into this problem.
Right, so thank you so much. It's actually, you see, we can figure that even cross-disciplinary ideas can be an inspiration to you, like behavioral studies or psychology studies or even some data sciences can help you refine the existing models, right? So now this is an open question to the public. Do you have any idea on how Gustavo can collaborate more with academics? Do you see what he could do with his challenge, with the mismatch of profiling in robo-advisors? Or do you have maybe a question to his study? Anyone? Can we have the panel for the chat? So maybe like this we could have questions. Hello? Yes, can we have it? Yes? On the left. Okay, so if you can just go on the app and you can just type questions. All right, so we're gonna move on to the next one and then we're gonna come back to you. All right. So the number 2, I have the brain signal monitoring in finance, right? So this is Ben's challenge. It was actually very. Do you have the device with you today? No, you didn't bring it. So this is an interesting. It's kind of like borderlines not only finance but many other disciplines. So how monitoring of the brain waves can help us understand, well, actually people's reactions or risk, right, and decisions or errors in decision making, risk aversion, and all this. So Ben's challenge was to try to figure out how the analysis of the brain signal monitoring could be used in the world of finance, because your startup already has contracts in the health sector and in the defense sector in the US. Okay, so could you elaborate a little bit more on that?
Yeah, of course. So we sit in the space of brain-computer interfaces that's outside of what sort of you might conceive of as far as Neuralink, for example. We don't need to be inside the head, we can be outside the head. Outside the head, your brain's still emitting electrical signal, but that signal is attenuated, right? The skull's fairly thick, you have muscle movement, eye movement, ambient electricity, things like that. What we specialize in is on the software side, decoding what is a fairly noisy, lossy signal, and then getting some sense of what's going on cognitively. And so we have a number of measurements: cognitive workload, focus, enjoyment. These measures we're able to provide in real time. The hardware that we need for that, we're kind of agnostic, but in general, what we aim for is consumer-grade devices. So something like headphones, in-ear earbuds, headbands, AR, VR, anything that's touching the skin on the head receives some signal, and so there's a signal that you can decode with software. And so we spent the last few years really exploring a large number of industries in terms of collaborations. We've done some work with entertainment companies. Bad Boys for Life 2, they rejigged their trailer using an audience test where they had an audience sitting through a 5-minute trailer, determining which parts of the trailer were boring, and then readjusting that. We've done work with defense, so the US Air Force Academy is now doing cognition adaptive simulators. And music, we've done a lot of areas. One area we haven't touched is finance, and anywhere there are humans and there are brains, and that applies to finance as well. And so just kind of interesting to think through ways in which our decision making might have some impact, either positive or negative, ways that we can adjust that, adapt to cognition in the realm of finance.
Right. So thank you so much, Ben. I was actually thinking, like, if any of you want to collaborate with Ben and his startup, we were following, we read to the letter, actually, Antonio's tips on how to make this collaboration. So we know that for you want to kind of test some, use cases in finance. The researchers probably want to publish in top-tier journals. So for them, it has to be not specific enough. It has to be general. But there are some use cases. We talked about it with Antonio over lunch. So could you elaborate, Antonio, on that?
Yes, of course. So yeah, we discussed this about over lunch. I think in the space of traders would be perfect for you. So the problem is that this will require the collaboration with another, like a third entity. Imagine a global asset manager, right? So obviously, what you want to avoid is that a traders trades in periods of stress. Now, if as a trader, I know I'm stressed, then I don't need your device, right? But imagine I don't, or imagine the information I have about myself is noisy, then your device could be very useful because it would be a sort of a warning signal. So it would be great if I know it's easier to say than to do, but imagine you manage to collaborate with a large asset manager, right? And you do this sort of experiment while a bunch of traders receive your tool and a control group doesn't. And then your tool could be helpful, right, to signal the traders when they have to stop. No? And then you can do a perfect randomized control trial and test whether your tool actually help traders to avoid the typical mistakes that are driven by emotion. So your data could be used so the data from your device and the trades from the traders could be used to test whether this works or not. Another application would be retail investors, but this is way more complicated, right? Because then it's harder to do a randomized control trial, and it will be even more expensive because you should send your device to run to those traders, and then also to get data about the trades, it becomes way more complicated. But yeah, I think the word of traders, it's the perfect word for you.
Yeah, absolutely agreed. And this is super interesting. I think part of our framing and how we think about the space I've never heard anyone, especially in finance, say that they have too much data, right? So if we provide cognitive data for traders, for example, over time, you're able to make certain assumptions or look into certain hypotheses as it relates to the temporal resolution of the data that we provide and the trades and the decisions that they make. It's super interesting. And also stress, there's the stress is a limbic response, which is easily detectable through heart rate variability. And then there's maybe emotional arousal or something that's not quite that visceral, but it's still there. And if you're more prone to error in that state, then we can potentially detect that in the brain. So super interesting. Thank you.
Okay, thank you, Antonio. Thank you, Antonio. So we were actually thinking, again, I'm going to be very honest because we want those collaborations to work. From the perspective of a researcher, we cannot publish something that is already common knowledge or that everybody knows. So we're gonna, if we work with you, we would be looking for anomalies, surprises, right? Those kind of things. So, but I think you could also test it on students playing on stock exchange simulators, see their stress or enjoyment of actually this huge adrenaline and losing money, who knows, right? So we were talking about other use cases from, let's say, the asymmetry of information theory. If you are a cherry on the market and you want to signal that you're not a lemon, you may want to wear the device because it could be headset, or any, wristband device, right? So you just put it on your candidates and you check how they react to your questions. And then the regulators might say in Europe, this is a no-go, maybe in the US, right? So you see, we were doing those kind of exercises of brainstorming in our room to try to figure out what we could test with this kind of device because it's very experimental, plus gather data and try to find something interesting enough to be publishable, right? Any questions, any comments from the public at this point? No? Okay, so let's move on to the next one. All right, the next one. So this is an interesting case. Tibor, this is yours. Okay, so it's an interesting case for people who actually live within the European Union and they want to take loans or mortgage credit across borders, right? And so credit agencies, they don't want to give you the credit because it's not in your country where you make your money, so they can't touch your salary. Also, let's say the house or the apartment is in another country, so they kind of can't seize it because it's across the border, right? So this was this kind of issue. Can you elaborate exactly what the problem is, what the challenge is that you are trying to build or that you're trying to solve or explain?
Yeah, the problem is that even EU is acting like one unity. It's split into countries, and each country has specificities. So even mortgage methodology varies across within one country among the banks that provide mortgages in that country. So it's the challenge is how to create a EU-wide credit scoring model that would allow us to estimate the creditworthiness of any EU citizen based on their financial transactions. These are the data that are available in the whole EU via open banking PSD2 or 3 protocol. I must disappoint you, Joanna. I did not find any academic interested in this research. They just said that this is too commercial for them, so I have to find grants to finance this research, and there are grants available in my country, so this wouldn't be a problem. But I had two other topics that I thought might be less relevant, and I discussed them with several people, and they are related how to facilitate mortgage seekers to submit digital mortgage application via our platform because it's very complex. It requires 30 to 50 parameters, and we intend to implement AI assistance and automatic extraction of data from documents to really make the submission of mortgage application as easy as possible. And I found a collaboration again with Antonio. He had a really good idea how to make experiments to really let's say, test this automatic information from documents, for example, loan contracts, and AI assistance against control group that has no assistant at all, and see how these AI instruments motivate people to advance further in these digital applications, how it facilitates the submission or finalization of a mortgage application, and at the end, even to estimate whether people who pass through this process thanks to AI assistance, whether they differ from the remaining group, whether it improves financial inclusion or it just attracts the higher risk individuals, so we pick up lemons instead of cherries. And this is something that might be very interesting for a research project. So I agreed with Antonio to get back to him when we have this AI assistance and automatic extraction ready to put in practice, and Antonio will suggest exactly how we should design the experiment to collect the right data that would be usable for his research.
Antonio, would you like to say your perspective? I think it's interesting when we share the details so people can get... Oh, thank you so much. So that the audience can get inspired maybe by those cases.
So here the problem was how to use AI to help individuals to go through the mortgage application, because based on my understanding, right, this process is, even if done online, it's long and it requires a lot of inputting of data. So that's when AI can help, in a sense that it can automate the process. And so I suggested that, for example, I could help, first of all, thanks to logs data. So logs data is basically the activity of what users do on the platform, right? So with these logs, you can see exactly where individuals stop during these applications, or where, for example, they tend to spend more time. So from the data, you can understand what are the roadblocks, right? And so this could help to design what AI is supposed to do, right? So you can understand what are the needs of the customers. And then based on that, one can design exactly an experiment, for example, for 3 or 4 months. This depends on the number of individuals that land on the platform, right? You can have control group, no AI, and then treated groups that receive different versions of AI. Obviously, this allocation has to be done randomly. For example, could be done on the seconds, right, they land on the platform. And then you observe, right, over these 3 months, all those individuals. I would expect, right, that AI helps in going through the application, but then, right, as I was discussing, there is the problem, should these guys really get the mortgage? Because there is the risk that, exactly, you are picking up lemons. So I think this could be an example of a successful collaboration, especially if this is done before the implementation, because that's where academics can help, right? So we can help in at least suggesting what is the optimal way to do it. And also this could be helpful for startups, especially when they go and, for example, ask for extra funding, right? Because if you have results based on an academic paper, based on the most possible rigorous methodology, and coming from someone outside of the company, right? You can put this in front of the VCs and says, well, this is the best we could do. And then you have scientific evidence that it works. And even if it doesn't, I think this is still helpful, right? Because it teaches you how to change, right, the AI in order to then make it work better.
We can tell that Antonio is working a lot with startups because he knows how to pitch collaboration to startups. So I think from what you've said, we already understood that this would be very beneficial to your startup, Tibor, right?
Yes, absolutely. And on top of that, it's completely feasible because we have a demo environment where we can really launch small marketing campaign to attract random mortgage seekers on our platform.
Would you provide the mortgage to them then?
Test 3 various scenarios and then evaluate before launching our product at our B2B clients. So this would be really very useful input from academic research for our...
What if they qualify for the mortgage? Do you provide mortgage then to them, or are you going to...
Not yet, we don't have license yet, but we are planning to apply for mortgage license to be able to provide mortgages. But now we are just working as brokers, mortgage brokers, only in my home country, Slovakia, but we plan soon to expand to other countries.
Right. So from the perspective of the startup, we understand. Now the perspective of a researcher, do you think there would be enough data for researchers to want to work with you? And do you think that there is something that could be publishable? Maybe it's more question to Antonio. How would you see that? Because you obviously would help the startup, but would the startup help you publish the results of such a collaboration?
Yeah, so I mean, AI is definitely a very hot topic, right? So I think the academic world wants to know about AI. Obviously, the issue of number of users is crucial. So, but this determines the number of months, right, the experiment has to last, right? Because, for example, once we were discussing with an Indian company. So these guys have like millions of individuals going on the website. So in that case, the experiment can last simply 3 days, no? Then the lower is this number, the longer the experiment has to last. But yeah, as I was discussing in my presentation, there is a sort of a sweet spot, no? In a sense that companies that are too small don't have enough users. And companies that are too large, you typically face so much bureaucracy that is impossible. But the fact that startup can run experiments, this helps, because as academics, we are really focused on establishing a causal effect. So the possibility of running a randomized control trial is already a huge competitive advantage. So even if the number of users might be low, this means that the experiment has to last longer. So there are ways to work around this. Yeah.
Are there any other twists you think we could use from the perspective of the researcher, like maybe the differences between the different European countries which are supposed to be unified and work the same way, but obviously culturally we're not, and even the regulatory wise either. So do you think we could try to explore any other angle, like maybe that another country is more willing to, this one is less, or the legislation is different, or users are different?
I'm pretty sure there are huge differences between countries within EU in the terms of mentality, culture, and approach towards modern technologies. For example, I would say in my country, people are more reserved in scanning their ID card to an app and providing their identity to someone who don't really know who it is. While in other countries where ID cards are fully electronic in their mobile, people might be more willing to reveal their identity when they deal with a FinTech lending solution. So yes, definitely another dimension of this research could be the differences between European countries.
Right, so even any researcher that's working on trust within FinTech, right, and the fraud detection or trust issues with the decentralized organizations in the world of finance could find some kind of line of work with you, right?
Mm-hmm. Yes, absolutely. I'll be happy. Just feel free to get in touch with me and we can collaborate.
Thank you. All right, let's go on to the next one. So the next one, here we have the economic impact of financial inclusion. This is a very surprising one. When I heard Christian tell me about this, I must say I was really shocked. I didn't know that many people, well, worldwide, but also in Europe, have dyslexia, are illiterate or innumerate, and they cannot compare 3-digit numbers one to another. So those kind of people get ripped off. They overpay sometimes. They don't know how much they're paying. And so basically, they cannot wear a wallet. They cannot go and spend money because they could overspend without even knowing that. So they're excluded. So we're talking about financial inclusion of those people. Could you elaborate, Christian, on how you're trying to include them, what the struggles are that you're facing with your solution?
Yeah, so we've built a digital cash solution where the users don't have to actually read neither numbers nor text. And so they can enter amounts by selecting coins or money which they are familiar with. I mean, it's digital cash, so representing that digitally makes a lot of sense. And then also specify things like the subject symbolically, and the entire app is driven in a way that doesn't require you to read. The fact that it's digital cash also means that the users don't have to use multi-factor authentication procedures with some bank because the asset is in their custody. And so they don't have to convince some third party that they intend to pay. They just have to convince their own device that they want to pay. So we have these designs, and we have some very promising usability studies that we did in Freetown and that are continuing. But the question is, what's the argument to make for central banks to deploy the solution? And I'm specifically talking about central banks here because in the affected countries where literacy is particularly low, they don't trust the banks. They at best trust the central bank that issues the physical cash. Now, in Europe, we have dyslexic users, which could also be affected, but the prevalence of dyslexic users in Europe is about 3 to maybe 15%, whereas illiteracy, numeracy in African countries can reach 20% among women, so it's a bit much bigger problem there than here. And so the question basically is, how can we quantify the impact of this inclusion? And we have so far talked to a couple of central bankers who basically, well, let's say believe are literate, and so they didn't quite see the dimension of the problem. And so having any kind of research that would quantify it, I was told, well, this is microeconomics. Yes, and the central bankers think macroeconomics. So that's already a challenge to bridge for the financial people. But quantifying the impact in a way that would convince central bankers that, yes, this should be something that they should care about would be fantastic research. And of course, this possibly includes more usability studies to observe people using the solution.
And actually, you mentioned some poor African countries. There's more and more entrepreneurship. Like this is on the rise in those countries. But if they cannot deal with, let's say, currency, if they cannot get paid or they have issues, so this is something that should be of interest to the central bank or a national bank of the country.
Well, again, it usually doesn't affect the entrepreneurial, high-tech minded people of the country. These 10 to 20% that are affected are usually the poor, uneducated people that have a limited impact on the economy. So convincing the rather rich and educated people that they should care about these marginalized people is not necessarily trivial.
Right. And we're talking about M-Pesa, right? That is like present in some African countries. How is your solution different?
Well, M-Pesa is operated by some mobile phone providers and still account-based. So you, and they use typically old phones. It's still based on numerical entering of amounts. So it's a completely different technical solution, and it doesn't have these inclusion features that we have.
And there's no issue with like providing savings for them because they don't have savings. That's what you were saying, right? So,
well, I'm not saying they don't have savings. What I was trying to say is the amounts that these people transact in are typically rather small. So it's, but of course, you know, what for them $100 can be a lot because, of course, the income and the expenditures per day are much lower than what they would be here.
So now this is an open question to the audience. Do you have an idea on how this could be quantified? If the national bank of a country or the central bank of the country says, okay, we can adapt your solution, you can help those people use your solution with it's with images, right? Or icons, or right? So we can adapt it, but you would have to tell us how big of an impact it would make. So how do you measure an impact of including those people? Anyone? How would you tackle this? What do you think the central bank? You have a mic. The central bank
usual
expects.
suspect.
I'm sorry. So, I understand this is a macro problem, but this is a micro-founded problem, right? So I don't understand why you cannot do a sort of a back of the envelope calculation, right? So based on your second point, imagine, right, you do an experiment and then you say, okay, we see that on average, people using this tool, like they save $5, right? So then based on that number and based on this is a very back of the envelope calculation, right? Based on the number of potential users in that country. Now, so imagine from your experiment, you find that higher literary people make earn $5, and then you can estimate in that country there are as many as these people, then you can do very easy back on the envelope calculation. So my point is, why go directly to macro when you could do a micro-founded study? And this could also help bring academics, because it's almost impossible to write a purely simulation macro without having any
No, as I said, we can certainly try with an A/B study in the small world, see the impact there, and then extrapolate from that. That makes total sense to me. I'm just saying, in the end, it would probably be a most convincing argument to the policymakers if we could show a macro effect and not just, oh, look, some poor people have slightly better lives.
Sorry, go ahead, Sheila.
I was just going to say, I didn't talk to you in the playground, but have you thought of collaboration with like places like Project Nemo, which is really big about disabled and accessibility groups?
We have a small collaboration with a university in the Netherlands that does accessibility studies. So they have evaluated our wallets for blind users. And as I said, we have done collaboration with our Canadian partners from My Oral Village to do usability studies in Africa. We also have a group, eSeniors in France, that does usability studies with older people for our wallets in particular. So they're focusing on seniors. We do not have any ongoing collaboration with groups focusing on disabled or dyslexic people. But that would certainly be of interest to get there.
Project Nemo, it's a massive organisation in the UK and US who deal with accessibility and apps for disabled and so on and so forth, and banking apps and so on. So, yeah, that might be.
So building on the question, thank you, Sheila. Building on the question, do you think, since we're talking about social inclusion, which is like a popular topic these days, or at least supposed to be, or in the European Union, do you think you could count on any grant, or the researchers in the room that maybe are hoping for a grant from any organization because they're trying to fix a problem of social inclusion?
Well, first of all, our existing development is grant funded by NGI Sargasso and NGI Thaler, which are EU projects. Now they have been focusing on the initial design, evaluation, and implementation work. But I would hope that further studies could have a chance of getting grant funding, of course.
And is there what kind of situation do you think it would exist in the European Union? I mean, or in Europe, this kind of in developed countries, or is it only a thing for poor countries? Well, do we have illiterate people in maybe the European Union?
Well, yes, we certainly do. We call them mostly migrants, and I always say, if you go to China or Japan, you are likely to turn illiterate because suddenly you can't read the alphabet anymore. And so any migrant that doesn't speak our languages is to some degree illiterate. And so we certainly have that problem here too, except that most of the time they of course do use Arabic numbers in their home country, so they're not enumerate at least. But the fact that we can at least do the transfers completely symbolically is still an advantage to those users, but they don't need the fighting with the numbers on top of it most of the time. But we certainly have illiterate people here. And again, they are the people that are likely least valued by our governments.
And in terms of trends that you know of, is this like an ongoing trend? Do we have more and more or less and less of illiterate people, or is this being fixed, or in terms of popularity?
Well, the statistics seem to show that the illiteracy rate in Africa has basically been unchanged for a long time. So it's been globally remaining at about, I think it was 850 million, pretty constant over the last 20 years. Now, I have not done the studies, that's just what I have read. And in terms of migration, I think we all have heard that the numbers are going up.
Anyone in the audience wants to ask a question or a comment? Any trend you know of in terms of inclusion? All right, so let's move on to the next one. Thank you so much, Christian. Okay, so now we're going to talk about AI. So Sheila put on the table the very interesting challenge. So Sheila is a consultant, and she gets requests from fintechs all the time, like on how to implement AI, because my board of directors is pushing for AI. I don't know how to do. I don't know how I can quantify the impact of what's going to happen. So how to adopt AI without having an impact on the quality of my product or services, right? So could you elaborate on what the challenges that you're...
Yeah, absolutely. So we are a digital consultancy, and we're finding more and more and more all our fintechs, whether they're CMOs, CTOs, or it comes from the ownership as like, oh, I've got a budget line for AI. Can you implement AI? And so we turn to what is out there, what is their risk tolerance for implementing services that they know nothing about? Or indeed, do they know something about it? And what is their expectation of what do they mean when they say AI, and their knowledge about it. So we looked all over the internet, we looked for research papers, we looked at data, and we thought, well, there is nothing out there that actually points us into a direction where we can put services together to solve a need for small, medium, and large enterprises, and indeed different sectors. That's drilling down a layer. So I thought I'd bring my challenge to a bunch of academia and say, you know, is anyone working on this? The area of AI for fintechs, what is the data out there to know what their knowledge, intelligence, and appetite for risk is? And yeah, because so far we've found nothing. And if anybody is interested in collaborating and looking at this as a data source.
So if you want to build, let's say, because this is what they're asking you to do, like some kind of product you could...
That they're asking for us to implement AI services. It's as broad as that. We never get a brief. Normally you'd get a brief on I expect A, B, C, D, E, because they just don't, it's a line item that's come from the board saying we've got X amount of money to invest into AI. But when we ask for their pain points or what are their KPIs or what are their solutions or what does success look like for them, they actually haven't got a clue. So we're like, for the first time in our lives, we have no data. So we know what we know, but we don't know what their risk is and their appetite for risk and their knowledge and intelligence. And I was wondering if there was any studies done on, you know, the broader subject of AI for fintechs.
So if you're trying to build a safe, let's say, adoption roadmap for them, right?
That's right.
Do you think it's more like a question for the researchers in the room that work on AI ethics, or more like governance, or more strategy and the KPIs? And what do you think?
Yeah, even, you know, we looked in all aspects, you know, AI governance as well, but yeah, strategies really. And actually, if there's any sort of research done out there that looks at fintech groups of people, whether they are by persona or even generically CMOs, what is their understanding of AI for implementation for financial services companies? And what is their expectation of success? So that's when we started to look at the, you know, look at different research studies, and we found one of those, lots of people must be doing lots of work in this area. And we can't find any data sources to sort of, because we always look at what is the data, what's the total addressable market, service addressable market, what is the appetite for risk, and let's put some services or, you know, box some products. We just can't find anything.
I fully agree that AI is probably needed in fintech, but unbeknownst to executives, it's already being used. And the worry is that the execs, when they reach out to you, Sheila, they want some consistent institutional memory, LLM-enabled solution that all the employees are using in a unified, synchronous manner without cottage industry silos and different people using their own different LLM, leading to different and disparate, dare I say, solutions for different clients of your fintechs. There is a company called Babel AI that I'm affiliated with, and they're a one-trick pony company. They audit AI algorithms. And what they do is they look at the regulation you're subject to, whether it's the EU AI Act or each state in the US has their own act. Singapore, Australia, they've all got their own different rules and regulations with different norms, and some of them are quite idiosyncratic. And there are big fines involved as well if you get things wrong, given that there are, 40 types of biases. So yes, there are some firms that are helping figure out what needs to be done and, more importantly, fixed. But they can only do that from a historical audit perspective. What this firm's now gone and done is created a few targeted training courses, because they've learned the hard way when things go wrong. How do you prevent this? And yes, so that's perhaps another way of indoctrinating what's right in terms of the use of AI in different parts of an organization functionally, and it differs from whether you're in a back office or a front office or a middle office function in a fintech. Sorry to ramble on here, but yes, it's more about the AI adoption and creating a consistent institutional memory type model that's adopted across the board as opposed to in silos.
That's very interesting, and thank you for that workshop, because you're right. What we're finding is we're actually doing a lot of AI for them, but we have to reframe it so it fits with their budget lines. But equally, you're absolutely right. What we're finding is that people are using their own personal ChatGPT to put in stuff like business briefs, and security is a risk. So we're like, do we make them aware of it? Is it our problem? Is it their problem? What is our risk? So yeah, that's where we're kind of, looking for assistance.
So do you also need data? Do you want to hear of some worst practices, best practices, or any practices?
Yes. Well, I didn't know these companies existed, for one. So, and absolutely, there are different acts in different. I mean, the US is a complete minefield.
It is an American company, I should have said,
yeah.
and the CEO is a lifelong academic. He is an astrophysicist.
Okay, brilliant. Well, that's a really good.
Look
That's
at that.
great to know that, and yeah, we'll talk after. Thank you so
Fantastic.
much.
FinTech academic collaboration in action. Yes. It works. All right. Thank you so much, Sheila. Okay, we're going to move to the next one. Siddharth, I think I'll go with you because you had to go a little earlier, right? So I'm just going to skip Alex's for a second. All right. So your challenge joined at the very, very end, so we didn't really have a lot of time to work on this. So if you could just elaborate on what you do and what your FinTech does, and what the challenges that you want to present to academics, maybe they can help you figure out the answer to.
Yeah, so the Finternet basically allows, sorry, yeah. It's been a long day. So Finternet basically allows individuals and businesses to have control over different types of assets. And these may be, and I spoke about it in the conference earlier today, they may be regulated assets like money or securities. They may be registered assets like physical property or, for example, a vehicle. It might be attested assets like gold, silver, other types of commodities, energy resources, or user-controlled digital assets. And so the challenge that we've been thinking about is particularly the governance challenges that come in across different jurisdictions. And not just from a cross-border lens, which is what's traditionally discussed, but if you think about it, even within a country, how do you start to unify across these different jurisdictions? So for example, physical property or what we were speaking about, mortgage, in many cases, the property registrars are local authorities. And so local authorities, how do you onboard them on common infrastructure? Typically, they're not interfacing with the banking system or with the capital market system, but you do need them to be involved if you're facilitating any sort of property transaction. And so really what I wanted to bring out was the fact that we are moving into a world driven both by tokenization and agents, that it's going to be a lot more unified for the end user. But for us to achieve that vision, you do need to think about policy frameworks where these different types of assets that may be governed at a federal level, state, or local level can be issued on newer age infrastructure. For example, enhancements on top of public chains and so on and so forth. And so that brings in a new type of governance model, new type of arrangements, which are different from traditional financial market infrastructure arrangements that we have, which were typically, consortiums of homogeneous entities, banks or asset managers and so on and so forth. And so the real idea with this challenge was to surface, are there interesting models? Are there models that are that can be referenced, that can be shared? Are there newer ways we could think about this problem in terms of how does each authority have its own control and autonomy while leveraging this kind of infrastructure? There are newer models if you think about it from an internet standpoint. So you could think of it as traditional financial market infrastructure governance or how the internet is governed. And those are slightly two different mental models that exist. So the real intent was to just put this out and seed this idea. And if there are academics working in these related areas, then we'd be happy to collaborate.
So design governance models that will work.
Exactly. And newer age governance models. So, how do you sort of keep the first principles of what parts of these governance arrangements are important, but you're using the newer age infrastructure that's coming up to think about it. And like I said, so the way the internet's governed is very different from the way traditional FMIs are governed. So how do you think about it in that construct, in a more distributed, decentralized construct, while still retaining control where required?
And so what governance issues or standards are the hardest to align across borders, you would say? Which ones?
across borders, it gets even more complicated, right? And honestly, these are typically nothing much to do with technology. A lot of these come down to legal arrangements and bilaterals and contractual frameworks, liability frameworks that come in. And there are different models. You have models of passporting regimes, you have models of mutual accreditation, you have models where people create standardized contractual structures. But a lot of these have their limitations because they're really focused on one asset class. When you start to think about this across different asset classes, like let's say I'm a US investor and I like the example you were giving from a mortgage perspective, I was talking to someone and they were looking to get, I think, an investment visa. And one of the conditions for that, they're based in the UK, and one of the conditions for that is you need to purchase some amount of property or, make investment in some asset class, including property in a European country. I think it was Spain or something like that. And so this was a cross-border transaction, but it was extremely friction-filled and, involved actual physical visits. So there are a lot of these interesting types of composite flows that come up as well, which require newer age forms of governance than the traditional models that I spoke about.
So who do you think would be of most help to you? Some legal scholar or policy researcher, an economist?
Yeah, so I think probably a mix. It could either be people from the legal profession or public policy profession for sure. I think people from economics background as well, because some of this concerns itself with matters related to economics. So it could be a broad mix. Or it could be people that are looking at the academics that are looking at creating theoretical models on newer age infrastructure like public blockchains and so on.
Very interesting. Anyone wants to ask a question or a comment? Tibor, any common grounds with the cross-borders issues?
If there exists the European Land Registry, that would be just perfect, or European Credit Registry to verify credit history of each EU citizen or credit scoring, I would be happy. It would make my life much easier.
Right, so we're adding to the wish list. Please, mortgages as well, take into account. Okay, thank you so much. We have one more. Alex, are you in the room? Can we have you here? Come. There's more chair. Yes. Please. All right.
Thank you.
Oh, it's okay. Okay. Oh, don't worry.
Not exactly a one-for-one swap, but close enough.
You see, we had so many fintechs, we don't even fit on stage. So fintechs are eager to collaborate. All right, so Alex, why don't you tell us about the issue that you put on the table in terms of payment networks, how actually you're looking for predictive analysis or some kind of predictive models for liquidity. Can you elaborate?
Yes. So I shall start by saying Interledger has a protocol for interoperability for payments. So we connect what we call account servicing entities, which is banks, wallets, all the way down to central banks. We make them talk to each other and connect so that they can exchange money, right? And in order for them to actually exchange money, they have to put up a certain amount of liquidity to transact on that amount. You can't send $1 billion to a small little bank because they don't have the capacity to unload it. So everybody kind of assigns a budget for how much they want to transact or how much they have available to transact on the day. We call that the liquidity amount, right? The problem with that is the same problem with SWIFT. Why nobody connects to 100 other banks on SWIFT is you have to put up money and lock it somewhere where they don't make money for you, they make money for the other bank, for your counterpart, right? For us, people kind of take guesstimates on how much money they need to lock up as liquidity in order to transact. Some of them have very sophisticated predictive algorithms that tell them about how much money is needed in this magical account every day, and they're very good with it. Some of them don't really have all of this infrastructure. If you think about traditional banks, or if you think about some of the older banks, most of them don't have a tech team, they have a vendor, their software is probably 40 years old, and all they care about is how can you make more money, how can we get more deposits. Predictive analysis, not their strong suit. So
Sorry, if I can just interrupt. So what makes the prediction really difficult? Because is this data quality, is this unexpected shocks, or it's too complex? What makes it hard?
So the hard problem is there are more nodes in the network. So if, for example, I only put up $1 million in liquidity and I've processed my $1 million, the network will adjust on other routes to make this money move. But I only have my data, so I don't know if how much could I have processed more, right? Now, we've started collecting all of this data anonymized to see the liquidity levels, to see the routing of payments, to see how rate influx is changing. Because, for example, I have $1 million, right? And I don't want to be left without money. So I'm going to make my fees higher for the next 30 minutes. That means my competitor on the network with lower fees will start processing the payments in the morning. I'm going to bleed them dry of liquidity, and then I'll take the burnt of it, or the biggest slice of the pie, because now I control the market, right? So there's a lot of factors that goes into this liquidity game, which is basically what you do when you're trying to corner the market, right? What we're looking for is to provide the predictive service or predictive model that's available for the people who want to be more sophisticated, so that they know how much liquidity at which time of day they should be inputting in. Because if you think about liquidity, the banks do this all the time. If you are in a country that only processes settlement or transactions 3 times a day, that's what usually happens. They put the money in the market, so you have money available at 8 a.m., you have money available at 12, and then maybe you have money available at 5 p.m. And that's based on when the money comes in from the Tokyo market or from the US market or from the local market, right? All of this is already created for an individual bank. But before now, nobody had access to the whole network and data from the whole network. So everybody kind of predicts what they think they're going to have. And most of the time, it's guesstimates. How accurate you are, you never know. There's an opportunity to look at the whole network and make it more efficient. And the reason we want to do this is the cheaper it is for you to lock up money, the cheaper it is to make transactions. So if you could lower the cost, right now, the average fee across the network for transactions is below the 1% mark. If you had better predictive models, you'd actually make more money with your money outside of the network. and you wouldn't feel bad about locking it into the network, it will lower the cost of transactions to maybe 0.2%. That would be amazing. So I'm trying to figure out, again, the data set is massive. We have billions of transactions a year. The transaction size is small-ish. It's starting to get bigger. It would be good for somebody who actually knows what they're doing to look at the data and help us figure out the predictive model.
So here there's maybe like a field, this is the area for collaboration for a network scientist, not only like a statistician or maybe like financial stability researcher, right? What kind of expert do you think you're really looking for?
Honestly, this is the problem of the internet. The same problem we have on the internet is you never know how much traffic you're going to have. And I don't know if you remember this year, the internet went down twice because Google couldn't predict their traffic. And there was too much traffic on the network and Google went down. That Google is part of core infrastructure and they couldn't figure it out. I am doubting anyone is going to figure it out, nail it down. But even increasing the reliability or the level of prediction or the level of confidence in the prediction would be good, because right now it's that level of back of the napkin, back of the envelope math that when it works, it works, but you're leaving a lot of money on the table. People who make money out of money kind of care about the accuracy of the model. So somebody who could get it to like 90-something% would be good. In terms of what that looks like, I don't know, we've put AI on it. AI doesn't look good at this. It does, I mean, it works good at predictive modeling and catching patterns. It did not do very well on this particular problem. So after putting AI to it and failing, I'd like to see a very smart human try to figure it out.
And if a very smart human helps you with that, would this be publishable or would this be proprietary?
So everything we do, because we're an open tech foundation, everything we do is open source. Absolutely every piece of code that we do. We don't believe in competitive advantage. We are legally not allowed to make a profit. We don't anyway. So this would not only be out in the open and publishable, but because we're a grant-making organization, we have given out research grants. Our recent stream of research grants just closed. I think we've given out 15 of them. And so we have research grants available as well. So this wouldn't be a unsupported line of research.
So could you actually elaborate a little bit more on this? Because I've had more academics ask me about it when you were in the playground room. So in the ledger, apart from the grants and possibility of collaboration, you have a big stock of data, right, that is available for everyone. So what kind of data could be of interest to the audience here?
So we have telemetry from a self-reported telemetry, opt-in telemetry from all over the network. That means the wallets, when they sign up on IntelliJ, when they turn on their IntelliJ connection, they have a data pipe, both for dead use and for public use on the network. Now, we do sanitize that data for privacy. So, for example, if you make a transaction of a cent followed by a transaction of $1, we don't actually record a transaction of a cent and a transaction of $1. We record two transactions of 50 cents, thereabout. We don't give researchers the ability to see who the end user is, the sender and the recipient. You only know the digital wallets they've been sent from, so you can know it's from, I don't know, let's take two random wallets from the network. One of them is called Chi-Money and the other one is called Zago. So you know it went from Chi-Money to Zago, but not which customer is Chi-Money and which customer is Zago. You can know the currency of the transaction because it's cross-currency. And you know the... we packetize payments. So a payment might be $1 and that might be a single packet. Mm-hmm. Or we have a payment of $1 that's 1,000 packets, and you know how the transaction went. That's because it allows you to basically optimize for the most efficient size of transaction. If I make a $100,000 transaction in a single transaction, that might be locking up more liquidity than one of my partners has down the chain. Mm-hmm. So making $1 transactions 100,000 times would give me better success rates, because after liquidity drops after a certain level, they'll top up their liquidity. So all of this data is available, and here's the good thing. We are fortunate enough to have a tech team of about 50 people who love this idea. It's a problem they've been trying to solve internally for a while. And so if there's any data that we're not collecting and you'd like us to start collecting, because we're open source, you can actually see the collection methods and the collection methodology we use. You can help us improve it to get you the data that you need. Bad news is we have data going back for about 3 years. Bad news is we can't retroactively put it on the data we have, but we can start collecting data that you need for the next, I don't know, 6 to 12 months to make it worth your while.
So this, I think, ties beautifully to the tips that Antonio gave us on the first day, because here you could work with the top CEO. Here you have a lot of data. Here you have a tech team, actually, that works on the data. So check, check, check.
But bear in mind, I only have very few data engineers. If you could bring your own data engineers to the party, I'm happy to pay for that time.
All right, great, thank you. And then this morning I saw Christian and you were having like a very interesting discussion. And I think there is a collaboration not only with the academics, but FinTech collaboration. Could you elaborate, Christian?
I mean, we have two open source payment networks in the same room on the same panels. Of course, we figured out a way to work together. More on that next year. We don't want to spoil the surprise, but more on that next year.
Right, so next year on this
stage, by the way,
tell
anything
us.
you heard this morning that was about compliance and regulation, it never happened.
Okay. I haven't heard anything. All right. Okay, so now I'm going to ask, by the way, any questions to Alex at this point? No, we have a very shy audience today and not a lot of people. In the last day. Next year, I think, David, we're going to do it on the first day, right? Very first thing. Thank you. Okay, so now a quick question to each panelist. Have you ever worked with an academic? Do you know the species? Do you know what it's like? Maybe you are an academic. So would you like to elaborate? Do you know what the collaboration might look like? Come back, Christian. Come back on stage. Ben, do you want to start?
Sure. Well, in my case, I'm a chief of staff of the organization. The CEO that I report to is a computational neuroscientist with a PhD in non-invasive signal analysis. So very familiar with working with an academic. My father is also one. So very familiar with that. We've published some work around validating our signal and as it relates to like focus modulation and audio, but more data and more validation is always helpful. So familiar with it, but always open to more.
Okay, thank you. Gustavo, how about you?
Well, I'm a wild card. Probably we were saying this joke in the morning, same as Tibor. I'm both an academic and practitioner. The only difference is that he's doing well, I'm doing bad. No, just kidding. But yeah, yeah. I think I think I've seen both of the worlds, and as hard as it might sound to believe, there might be some collaboration and there might be some common grounds, and we saw that with some professors who have been discussing here today. And it's just, I think Antonio was very right on this. It's just about framing correctly the problem and framing it in the language that both understand. So yeah.
Okay, thank you, Sheila.
Absolutely never done this before, so super interested. We've worked with a lot of journalists and bloggers and thought leaders and influencers in specific sectors, but especially payments, and also collaborated on a few research papers. But no, it's been super exciting to see, the world of academia and how it works and meet people, and because you have stereotypical views about them, like they probably do about agencies. So no, I'm really interested in entering this space.
Okay, thank you. Tibor.
Thanks. As Gustav mentioned, yeah, I did academia. I have PhD. I did postdoc. I have publications in international journals. So I understand perfectly this world. But I left it a couple of years ago when I decided to launch my own startup. But I always had in mind to come back. So I will be very much happy to be able to collaborate on academic research again. And I even have a plan if I manage to make my company running without too much involvement from my side. I would just focus more on public good and bringing some new knowledge. So academic research is definitely on my life plan.
Okay, so you speak the language.
Yes.
Great. Okay, Christian.
Well, I'm here with the one with the 2 badges because I didn't give up my academic hat. I just kept it. So I'm a professor and CEO. So that's a fun one. And obviously we are working with lots of universities from Eindhoven, Berlin, Dresden, my own university, Academia Sinica, so all over the place on our project. The magic work that I heard Alex already utter that really lubricates any academic collaboration is funding. So if you have funding for the academics, they'll always be very happy to work with you. So that's the main problem that I have, is I don't always have funding.
Yeah, I've done a lot of work with academics. So in fact, my co-founder as well has a doctorate. And we've been working closely with academics across those in multilateral organizations, universities. We're now setting up a center at Cambridge University as well. So we've been working closely with academics over the last 10 years, so quite familiar with that.
Okay, thank you. And if you get to build a collaboration with an academic, what part or what area do you think you would be most excited on, like the data treatment, the theory, the regulation, or maybe the behavioral insights? Maybe we have some neuroscientists in the room. Which part do you think you would be most excited to get from this collaboration? Anyone in the panel?
Well, I think if the problem again is correctly framed, then it could be could be presented in a very beautiful way. So, for example, I think about Alex's problem, and I just think it's a mathematically beautiful problem. You can even think about like n vector incognitas and so on and so forth. So I think the way you think about it, the way you structure and the way you try to put it on the table, that will influence a lot. So for me it's very interesting. The most exciting part is to find some truth behind on any problem. Is to reach a place where you can actually get insights from something, and that is what I love from science, and that's why I'm in the science path as well. So I think it's not only about profit and business. It's also about finding some sort of truth in what you're doing. So
from a different perspective, right?
Sheila?
Yeah, and I think behavioral analytics as well, because people only know what they know and they don't know what somebody else knows. So I think sort of sharing that common thread so that the FinTech, from my perspective, doesn't feel like isolated, or they should know something that they don't, or they've got like decision inertia. So I think the behavioral analytics and the data and it becoming a piece of published thought leadership that can actually help people, and they have a directive to work from. I think that's very interesting.
Thank you. Look, we're having this conversation about collaboration, fintechs with academics. We're not talking a lot about regulators. How do you think regulators fit into this equation, into this conversation? Do you think we could expect any support, any collaboration from regulators? Which ones would you knock on the door to kind of get any support, any ideas, any perspective, data, change, lobbying?
Wow, I can certainly answer this question because I worked as a senior researcher for the Central Bank of Slovakia, and my research was directly related to regulation. So definitely I love empirical research because empirical research can bring new insights, results that can be directly applicable to new policy setup, improve regulation, improve functioning of the society, or even come up with new products. And this is where I see from my current perspective as a FinTech founder that if we come up with some new products or variants of new products and really based on some analysis, empirical research, we find out how people react to different technology setups, etc., and really find a product that can bring new value to the society. This is for me the highest added value research can bring on table.
And do you think fintechs, or in general startup founders, do they have regulators in their network? Are there any events where they can actually just go and approach someone, knock on the door of one of them?
Well, there are many programs. For example, National Bank of Slovakia has 2 programs for fintech startups. The first one is Innovation Hub, where you can just ask questions and you get highly qualified replies. And the second program is a regulatory sandbox, when you can actually test your product in real environment without the fear of receiving fine from the regulator, because they prepare you for this testing. So I think the best way really to avoid any troubles with regulators is just collaborate with them. And there are programs that help you.
Christian, you knew I would ask you this question. You've had tough experience trying to collaborate with some regulators, some central banks. Can you tell us about it?
Well, there have been good experiences and not so good experiences as usual. I mean, for me, the most fun one was, of course, with the Swiss National Bank. We found an article written by one of the directors, Thomas Moser, and I read the article and goes, wow, this guy actually understands the technology. I mean, he's an economist, but he understands what he's writing about on the technological side. And so we contacted him, and he invited us to present our technology to him in person. And again, he surprised me by his background knowledge of related work and the questions he was asking, very clued in. And in the end, we ended up writing a joint paper on it, on how to issue a central bank digital currency, which got us introduced to more central bankers. And let's just say there where some of the disappointment started. Again, some very positive collaborations. In particular, the Bank of Canada was very kind and knowledgeable. But other central banks, we had often the experience that they didn't understand the technology. They were playing around with some blockchains without understanding that decentralization doesn't exactly match central banks. And often we had the strong impression that they had some people in-house, they were developing some in-house product, and they were just not interested in better solutions because they were invested into their in-house solution. One of the more fun ones, we told us, yeah, your solution is very interesting, but we have our 5-year plan, and we're sticking to our 5-year plan. And it's just yeah, so at least it was only a 5-year plan, not a 10-year plan.
All right, so let's say we reconvene on this stage in a year. What kind of progress do you imagine like you can make collaborating with academics and maybe regulators within 1 year? What do you think? Could you achieve something within 1 year? Do you need to work faster? How do you see that, the progress? How would you showcase?
I think in our case, it's a question of technology deployment, right? So as there's this inflection point where more consumer hardware leverages EEG and that data is more available, we can already provide hardware. It's easy to record with our system. You don't need any specialist knowledge. You can immediately record, run trials, and get output data from someone's cognition. So for us, over the next year, you could easily see trials. We currently have a trial in Israel around PTSD and dream incubation. So there's a lot of ways I can see that happening in the next year.
Tibor, you wanted to elaborate on this as well.
I think in 1 year we can accomplish the experiment that I discussed with Antonio, so we can already have data, first results, and not yet a paper. It takes longer, but at least some business insights.
Okay, thank you so much. Do we have any questions from the audience? No? All right, so one last fun question because I think that finance is fun, and David's gonna corroborate on the story. So if you were to describe the collaboration you imagine between fintechs and academics, what kind of emoji would you design or attach to this?
I think a boom signal, because it would be the first for us. So big boom.
Surprise.
Boom is not bad because sometimes it can blow your mind what is possible.
Exactly.
So when TU Eindhoven researchers came up with a Thaler protocol version for post-quantum, I was just, oh yeah, that variation, I never thought about that one. That was brilliant. Or now here, Catherine comes up with, I can prove you're the optimal solution. It's going, okay, I never thought of it that way. So I wouldn't have been able to even give her the problem. Well, it's a great solution. Thank you.
So let's finish on this, on the big boom, like mind-blowing collaborations, hopefully taking place from today, because the event is about to finish soon. Our hackathon-style collaboration playground finished. But let's hope that the collaborations start here. So let's keep the momentum going. Thank you, all of you, for sharing the experience and for putting the challenges on the table. All the best. Thank you.
Thank you.